Hello and welcome once again to the Smart Money, Dumb Money show. And I am your host as usual, Keith Richards. I am President and Chief Portfolio of Value Trend Wealth Management. And today we're going to talk about gold. We're going to talk about an 8-year cycle. And a lot of the research I'm going to be drawing from was from work from sentimenttrader.com. So I do want to give them credit. By the way, if you like sentiment research reports, these are the people to go to. The subscriptions aren't that expensive and they allow you to access all of their sentiment research. But the other neat thing that comes with their subscription is they send you daily updates. Now, depending on which program you buy, they give you a deeper or not so deep research on the daily report, but it's a really comprehensive package either way. And what I'm going to be pointing out today is some research done by Jay Capel, who I have interviewed here on the Smart Money, Dumb Money show. And if you are interested, I encourage you to on the video search engine, type in J-A-Y, and Capel, and I believe that's spelled K-A-E-P-L-E, but you can actually probably just type in J-A-Y and you will find the interview I did with him less than a year ago. Smart guy, very analytical person, as everybody is over at Sentiment Trader, and I do encourage you to watch that video. He talked about some metrics you can use to determine if the market is looking bullish, bearish, or neutral. So without further ado, I want to introduce this 8-year cycle that I was not aware of before I looked at it. And I've done a few of my own charts to illustrate this cycle that Jay talked about in his research report. And I've put together a bit of presentation in my own words so that you might help your own trading in gold and understand the timing on that trading. So let's take a look at the cycle. I put together a PowerPoint and it's kind of interesting. So this is it's really an 8-year full cycle, but it's a 4-year bull cycle, 4-year bear cycle in gold producers. Now that cycle, by the way, Jay pointed out that it was on the mining stocks, but actually, as I'm going to show you in the first slide, it also applies to the bullion as well. So as you'll find out, I'm going to give away the punchline here. The next cycle on gold for a bull part of that 8-year cycle is coming soon. So let's take a look at what we're talking about. So this is right out of Jay's research report, and he said gold mining stocks have shown a tendency to move in an 8-year wave, 4 favorable years followed by 4 unfavorable years. So that's his verbiage out of his report. So let's talk about that. First, I want to do a chart that I put together. This is not out of Jay's research, but I wanted to compare how bullion is doing to his gold producer cycle. And what I found was, and we're going to be looking at the gold producers in a second, by the way, but what I found was that the cycle does in fact reflect in bullion what it reflects in the miners. So this in red is the positives on his cycle, which is the positive years were 61 to 64, 69 to 72, and so on. And these are the opposite years. So from 64, you ended up with 65 to 68 is the negative year, etc. So generally speaking, if you look at my black arrows versus my red arrows, there was a couple that were sideways. This black arrow, by the way, was not actually a negative. I made it go down, but as you'll see on the actual statistics, the 65 to 68 period wasn't bearish at all. But on average, you can see, even on the gold bullion chart, that the cycle was pretty good. That if you followed the opposite 4 years, you got either a flat or bearish move, whereas you followed the bullish moves, you got generally positive moves with only one flat period here. So we're going to look at those stats in a minute, but you can see for bullion, this cycle definitely was in place, but you'll see that the gold bugs index, which is an index you can look up on stock charts, it's been around a long time. It's the gold producers, okay? And you can see that going right back to the early 60s per Jay's cycle, that generally speaking, the returns on those 4-year cycles have been magnificent. So the next one that's due, we'll be talking about in a minute, but I want you to take a look at this chart and then compare it to the next chart, which is if you did the unfavorable 4 years. So this is almost like looking at a seasonal chart, isn't it? Except this is on a rhythmic 4-year bull and 4-year bear period. All right. So you can see that in the first couple of years, and that's what I was mentioning, that the unfavorable cycle was actually bullish. But the rest of the time, with one other final exception to the upside, the 4-year cycle was bearish, and it ended up looking, actually, I'm going to skip ahead a bit. It ended up looking very, very positive if you only invested in gold during the positive cycle years, and it looked very negative if you invested in the negative years, despite those first 2 cycles, as we saw on the chart, being positive during the, you know, the supposedly negative 4-year periods. Generally speaking, there was enough downside over the negative years to offset those few positives, and there was really only one negative, and I viewed it as flat on the bullion chart, but you can see on the actual producer chart it was bearish. So there was an average rate of return because of the 01 and the 1977 cycle of 122%. Now, let's say the median rate of return is probably a better way of looking at it during those 4 years, and that was 69%. So not a bad return for 3 years of investing to make 69–70% on your money, all right, versus losing an average of 16%. So I just want to point that out. I'm going to skip back to the chart that I missed. This is the most recent years. So if we again go back and we look at the cycles that we're talking about, 61 to 64, 69, etc., I'm starting here in the 2000s on this chart because this is the recent gold bugs index. It's the same index that we were looking at and just a closer look. So from the first cycle was 05 to 08, that was supposed to be a negative cycle. And sure enough, if you look, there's 05 and there's 08 right there. And generally speaking, it was pretty flat. Okay. So the cycle seems to be working. Big upswing the next 4 years, big downswing the following 4 years, and so on. The cycle's been working. So the current cycle on the producers, well, now remember, the bullion's slightly different, and you know that bullion is actually bumping up against a high level. Bullion is bumping up against 2000. Actually, I'm going to go back to that bullion chart just to see that. So here is the super long chart going back to 1969 on bullion, and you can see it's been stuck around 2000, but it's not been bearish. It's been sideways, very, very choppy. It's bumping its head against 2000. And by the way, I'm recording this on the 21st of November, and we're basically touching 2000 as I speak on gold. I don't know if it'll break through. It's really been suffering and trying to get through, but it's certainly not been a bearish producing position. So when you look at the producers, and many of my blog readers have noted this, in fact, put comments to this effect, that the producers have been in the hole. They're net negative over the past 1 and 2 and even 3 years. So that's probably because of this cycle that Jay is talking about. The good news is that this cycle will end in 24, and then that should be a great time to buy it in 2024. And it should be a time that we can look forward to rising prices on gold and maybe catching up to the performance of bullion after 2024. So again, I just showed you this, so I won't go over it again. So remember, the next positive year for the producers is 25 to 28. So it should be an opportunity to start buying sometime in 24, if you believe that the 25 to 28 period is going to be bullish. And this is the iShares Global Gold Index, which is different than the gold bugs index we were just looking at, but more or less the same idea, that it's not been a very good producer since 21. You can see net negative or flat, kind of flat really. So I want you to consider that maybe it will be flat for another year, but at some point in 24, maybe we should be looking at this index as a place to load up on, because gold bullion itself has been very good. And my thoughts are that if gold bullion breaks $2,000, then there's plenty of upside that will be eventually reflected as the cycle in the producers comes around. Now, why might gold break 2000? And I'm not making a prediction here because I don't believe anything until it happens. I'm a trader and a technical analyst, and the charts are all that really matter to me. So the chart suggests there's an awful lot of resistance on bullion at 2000. But if it breaks 2000, that's positive. Why might it break? Well, if you saw my last video on Israel and Germany, I talked about the fact that we at Value Trend have been buying international indices. We've got some emerging markets too. We like the international markets more than Canada and the States. And the reason, one of the reasons why some of these international markets might do okay is because of the US dollar declining. That helps their profitability, don't forget, but it also helps us if we buy, say, an ETF or a ADR, American Depository Receipt, that represents an international stock, because if their currency's climbing against the US dollar, we're making money on that exchange difference. So I think that the US dollar has 3 or 4 more cents. It peaked out at about 106 on the world basket. It's already down to 103, and support lies around 100 as the next stop. That's 3 or 4% lower from current. I think it's 100.60 or something today as I was looking at it this morning. So I think we've got a few percentage points upside on the US dollar. That suggests upside on gold. Will it break 2000? That's a question I can't answer, but there's a reason that it might happen. Also, inflation. Inflation has come down, but I've talked about stagflation many times. If you've not seen my stagflation video, please take the time to do so. It's probably one of the more important videos I've done in a long time. And I really do believe that we're going to see about 3% inflation, which, by the way, is the historic norm. 2% was not normal that we saw over the past couple of decades. So we should see about 3% or so. It's just above that now. I think it's about 3.5 for the coming years. And if that's the case, then we could be entering into an era where commodity sensitive securities like commodities, and you know I've talked about that before, could be bullish for the coming decade or so. So these are all kind of big picture things, but I do want you to keep gold in mind as its cycle comes around. Now remember, cycles are just tendencies. So here's gold again. You can see that big lid at 2000. But what's interesting here, by the way, is that the indices are showing some of the indicators below the indices as picking up. So this is money flow momentum. This is force, which is kind of a combination of volume and momentum. And this is rate of change, which is a very simple momentum indicator just based on price. All of these are picking up for gold bullion, whereas if you look at the producers here, they're not, okay? They're all kind of flat, aren't they? In fact, there's your rate of change. Take a look at the difference here. Big, big difference. So I think there's some potential for gold to break out. I'm not predicting, by the way. I never predict anything because anything can happen. But if it does break out, that would be exceptionally bullish for gold because there'll be nothing holding it back from that point. You've got weakening US dollar, you've got relatively high inflation there, sticky inflation at around maybe 3% or so, and you've got lots of indicators that are just starting to move and could really suggest a much higher price for gold in the future. Don't make predictions unless that lid breaks that I've got marked with my big purple line here, but it's worth talking about. So my conclusions: gold rotates in an 8-year bull market according to Sentiment Trader. 4 years bull, 4 years bear. We are in the 4-year negative or neutral part of the cycle, And you can certainly see that on the producers. They have been negative, not the bullion, but the producers have been negative. That should end in 2024, and 2025 should theoretically start picking up. And I think there's enough evidence in the bullion that suggests that that could support the producers to eventually start moving. The US dollar looks to support a breakout for bullion. Again, see my last video, but basically I see 3 or 4 cents down on the dollar on the world basket of securities. That's 3 or 4%. Okay, that will add to support for gold. Gold producers have been lagging bullion, but both could be longer term upside plays if gold highs are taken out. In other words, that 2000 or so lid that we just saw on the chart. So a little bit of a lengthy video, but I hope that really gives you some ideas. I think you need to keep gold in mind for the coming years because there's a lot of evidence to suggest that it might be a good place to be. I don't know that it's going to move much in the next year, but I do feel that in the next 5 years, we might just be well ahead by owning some gold. So you can time it as you wish and do use your own analysis and do keep an eye on the charts, because at the end of the day, you should be, as I am, a trader. We don't follow themes, even a bullish gold theme. All we do is we watch the charts, and the charts will tell us to do what we need to do. Thanks for watching. See you next.